The crypto market just went through one of its most volatile weekends of the year. A single whale transaction dumped nearly $2.7 billion worth of Bitcoin, triggering a flash crash that wiped out $500 million in leveraged positions within minutes. And yet, while Bitcoin stumbled, Ethereum broke through to a new all-time high. But here's the big question. Is this just a temporary rotation, or are we watching the beginning of a deeper shift in market leadership? Many prominent analysts believe it's the latter. In a recent string of posts on social media platform X, popular on-chain analyst Willy takes us through a deep dive on why Bitcoin's price action has been unusually sluggish this cycle. In his tweets, Wu points out that much of Bitcoin's supply is still controlled by the earliest whales, investors who accumulated coins at just $10 or less. Every time they sell, it takes over $110,000 of fresh capital just to absorb a single coin. According to Wu, this dynamic is part of Bitcoin's growing pains, and it could explain why price appreciation looks slower, even as institutional flows increase. Before we dive deeper into the weekend's sell-off, Ethereum's breakout, insightful analysis from some of the market's most brilliant minds, and other important developments, please share and like this video, subscribe to the channel, and turn on post notifications for more videos like this. Crypto markets are moving again. Bitcoin's gaining momentum, altcoins are picking up, and a new bull cycle is quietly unfolding. If you're in Canada and you're looking for a reliable platform to get positioned, Kraken is the one I recommend. Kraken's been around since 2011. It's one of the most established names in crypto globally, and in Canada, it's fully optimized for local users. You can fund your account with Interact e-Transfer, credit or debit card, wire transfer, or even at a Canada Post branch, and you can start trading within minutes. The platform supports over 175 cryptocurrencies, providing access to major assets such as Bitcoin, Ethereum, and Solana, as well as smaller cap projects with significant upside potential. For people who are active in the space, Kraken also offers margin trading and a pro interface with tight spreads and deep liquidity. One of the standout features is staking. You can earn weekly rewards directly to your account, up to 12% APR, depending on the asset. Whether it's Ethereum, Polkadot, Cardano, or newer names like Bitensor TAO and Celestia, you can put your assets to work while holding long-term. Security and support also matter, especially in this industry. Kraken is fully compliant in Canada specifically and known for its strong security track record. If you ever need help, their support is available 24/7 by chat, email, or phone. It's simple, but it makes a big difference. If you're serious about building a position in crypto ahead of the next big move, Kraken Canada is a solid option. It's secure, fast to set up, and built to handle both beginners and more experienced traders. Please check out the links below to get started. Thanks, and enjoy the video. Let's begin with a quick market update. Over the weekend, a legacy holder sold roughly 24,000 Bitcoin into thin liquidity, sparking a rapid sell-off. This brought Bitcoin down toward its critical support level of $110,530. CoinShares reported more than $1 billion in outflows from Bitcoin exchange-traded products last week, a clear sign that institutional support has cooled. Even Michael Saylor's MicroStrategy, which remains the largest corporate holder of Bitcoin, only added about 3,666 Bitcoin in August, lighter than their usual pace. That leaves markets exposed whenever a major seller decides to move coins. Meanwhile, Ethereum has been stealing the spotlight. The Ethereum to Bitcoin ratio climbed above 0.04, signaling capital rotation from Bitcoin into Ether. Ethereum hit a new all-time high near $4,957 before retracing to the mid-$4,000 range. Importantly, this move wasn't just retail hype. Institutions like BitMine expanded their Ethereum treasuries, adding tens of millions of dollars in new exposure. For the first time in months, Bitcoin's dominance has slipped from 60% to 57% as traders bet on Ethereum's outperformance. A big part of this is speculation that the SEC could approve staking-based Ethereum ETFs later this year, which would open the door to even larger inflows. But here's the nuance. Analysts caution against calling this a permanent shift. In July, markets absorbed nearly 80,000 Bitcoin in new supply, with institutions stepping in aggressively to buy dips. That buying pattern could return if Bitcoin falls to key levels like $105,000 or even the psychological $100,000 mark. On the macro side, the S&P 500 is showing signs of fatigue, flashing a negative divergence on the RSI even as prices push higher. Meanwhile, the US dollar index is weakening, which could actually provide support for crypto in the weeks ahead if the trend continues. Now, let's turn to the other side of the market, altcoins, where the story looks very different. Ethereum has been the clear standout. Over the weekend, Ethereum blasted to a new all-time high of $4,957 before pulling back slightly to the $4,400 to $4,600 range. That's a huge psychological breakthrough, and the key number to watch now is $5,000. If bulls can flip that level into support, analysts say Ethereum could quickly target $5,500. But what makes this rally different is that it's not just retail speculation driving the surge. Institutions are piling in. Month to date, Ethereum exchange-traded products have seen $2.5 billion in inflows compared to Bitcoin's $1 billion in outflows. On top of that, firms like Bitmine have expanded their treasuries, with Bitmine's latest $45 million purchase pushing their Ethereum holdings above $7 billion. This kind of steady institutional demand is acting like an anchor, keeping Ethereum supported even when traders take profits. From a technical perspective, Ethereum's 20-day EMA sits around $4,349. As long as the price holds above this level, the uptrend remains intact. A clean bounce here could set up another test of the $5,000 zone. If, however, Ethereum breaks below its $4,060 support, the rally could stall. But for now, momentum remains firmly on the bull's side. Ethereum's strength is also pulling on market structure. The Ethereum to Bitcoin ratio has risen above 0.04, a level last seen when Bitcoin topped $100,000 in December. This suggests traders are rotating capital into Ethereum, anticipating it will outperform Bitcoin in the short term. Add the speculation around potential staking-based Ethereum ETFs, and Ethereum could be on the verge of a longer-term leadership role. The other major breakout worth highlighting is BNB. The token surged to a new all-time high above $900, signaling strong momentum and confidence in Binance's ecosystem despite regulatory headwinds. Hitting that $900 mark is not just a psychological milestone, it opens the door for a run toward $1,000, which would represent another historic breakthrough. Right now, $861 is the critical level to watch. This was the breakout zone, and as long as BNB holds above it, bulls remain in control. If buyers can reclaim and sustain levels above $900, the next leg higher could accelerate quickly. On the flip side, a drop below the 20-day EMA at $838 would be the first warning sign of weakening momentum, potentially setting up a correction back to the 50-day SMA around $779. XRP has been under pressure, trading around $2.91 and forming a descending triangle pattern. This is typically bearish, and a confirmed break below $2.73 could send the token tumbling to $2.33. The 20-day EMA is sloping slightly downward at $3.04, showing waning momentum. For bulls to flip the narrative, XRP would need to break above the downtrend line, which could spark a rally toward $3.40 and possibly $3.66. Until then, the bias leans cautious. Cardano recently bounced from its 20-day EMA at $0.86, but the move has been sluggish. Both moving averages are still angled upward, which favors buyers, but the negative RSI divergence is flashing a warning. Momentum is slowing. If ADA closes below the 20-day EMA, a deeper correction toward the 50-day SMA at 0.80 becomes likely, with 0.70 as the next downside target. To reassert bullish momentum, bulls need to push ADA above $1.02, which could then open the way to $1.17. The bigger picture. Together, Ethereum and BNB are showing that leadership in this cycle may not be as one-dimensional as before. Instead of Bitcoin dictating every move, Capital is now flowing selectively into projects with clear institutional support, network demand, and strong narratives. This shift away from pure Bitcoin dominance is why Bitcoin's share of the total crypto market has slipped from 60% to 57%. Now, we turn to experts to help us make sense of what's happening and what to expect from Bitcoin and other cryptocurrencies as we progress further in the bull market. On-chain analyst Willy recently posed a question many traders have been asking: why is Bitcoin moving up so slowly this cycle? Wu's answer points to Bitcoin's unique supply dynamics. He explains, Bitcoin supply is concentrated around OG whales who peaked their holdings in 2011, orange and dark orange. They bought their Bitcoin at $10 or lower. In other words, a significant share of today's Bitcoin is still controlled by the earliest investors, the so-called OG whales. These are addresses that accumulated coins over a decade ago, when Bitcoin was essentially unknown. Their cost basis is almost nothing compared to today's levels, $10 or less per coin. Wu highlights why this matters for today's price action. It takes $110,000 plus of new capital to absorb each Bitcoin they sell. This is a staggering figure. For every single Bitcoin an OG whale decides to offload, over $100,000 in fresh demand needs to come into the market just to keep prices stable. That creates a heavy supply overhang that slows down rallies. Wu calls this a kind of structural friction in the market. This differential in cost basis, the supply they hold, and their rate of selling has profound impacts on how much new capital that needs to come in to lift price. Essentially, the gap between early whale cost basis and new buyer cost basis means much more liquidity is required to push Bitcoin higher than in past cycles. The longer-term holders who are up 10,000 times or more can sell at any time and still lock in extraordinary profits. Wu concludes by framing this as part of Bitcoin's natural maturation. You can look at this as Bitcoin going through growing pains until these 10,000x gain investors are absorbed. This metaphor is important. The current sluggishness isn't necessarily a sign of weakness. It's the market digesting the supply of early whales. Once those holdings are redistributed to institutions and new investors, Bitcoin may be able to move more freely, with less drag on its price. Wu's point gets even clearer when we look at the discussion under his tweet. One user argued, it's moving slower because it's a mature asset that has gone from a microcap to a small cap to a mid-cap to large cap to a mega-cap. Mega-cap assets that are institutionalized will have diminishing returns. Bitcoiners don't understand this concept clearly. Wu agreed on the idea of diminishing returns, but pushed back on the notion that Bitcoin is already mature. In his words, agree on diminishing returns, but the point I'm making is it's not mature. A mature asset like gold, 6,000 years of use, doesn't have early holders selling who gain 10,000 times. Bitcoin is early in its capital absorption. It's sized at $2 trillion versus $20 trillion to $250 trillion for mature macro assets. This distinction matters. What Wu is saying is that Bitcoin isn't just another big tech stock or a fully institutionalized megacap. It's still in the process of absorbing capital from those early OG whales, while also competing for space alongside gold, bonds, and other macro assets that are worth many times more. In other words, Bitcoin's slower price action isn't a sign of stagnation. It's part of the growing pains that come with moving from trillions toward tens of trillions in valuation. But let's not stop there. Beyond the debate on whether Bitcoin is mature or still early, technical analysts are spotting something important on the charts. RektCapital recently highlighted what could be a double top formation, but not your classic M-shaped version. Instead, this one is forming around a lower high resistance level. Here's what's already happened. Bitcoin reached $110,500, which is close to the measured downside target RektCapital outlined from last week. More importantly, the weekly close dipped below the $114,000 level. That level now acts as the validation point for this pattern. But here's the nuance. A technical breakdown usually has 3 stages. 1. First, a weekly close under support, which we've already seen at $114,000. Second, a bearish retest where that same level flips from support into resistance. This hasn't happened yet. Third, confirmation via a continued drop after rejection. So yes, Bitcoin has started the first step of a breakdown, but without that retest and rejection, this pattern isn't fully confirmed. And that matters because, as RektCapital notes, this cycle has been full of false breakdowns and downside deviations. If $114,000 flips into hard resistance, then the bearish case strengthens and the measured move could complete. But until then, it's not yet game over for the bulls. What we're seeing in Bitcoin right now is a tug-of-war between long-term capital absorption and short-term technical signals. Willy reminds us that Bitcoin is not a mature asset. It's still early in its journey compared to gold, stocks, and other mega-cap markets. Yet, RektCapital warns that the charts are hinting at the possibility of a larger breakdown if key levels like $114,000 flip into resistance. Meanwhile, Ethereum and BNB are breaking records of their own, showing that altcoins are not just following Bitcoin's lead, but are carving out their own bullish structures. The question is, does this altcoin strength signal a broadening of the cycle, or is it a final blow-off before Bitcoin takes the spotlight again? So I'll put it to you. Do you believe Bitcoin still has decades of capital absorption ahead of it, like Wu suggests? Or do you think diminishing returns are setting in, just like with other mega-cap assets? And what do Ethereum and BNB's new all-time highs really mean for the rest of the market? Let's hear your take in the comments. I'll be reading and responding. If you found this breakdown valuable, make sure to like the video, subscribe to the channel, and hit the notification bell so you don't miss our next deep dive into the crypto markets. Thanks for watching, and I'll see you in the next one.